Good morning, everyone. It's Wednesday, the 24th of April, 2016. It's 8:01 a.m. Chicago time, 9:01 Eastern. This is another Trader Bite. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The news overnight, looking at what's driving us during this session, I want to remind you that today, a year ago was a drop. We saw a drop in the S&P 500 where the market's volatility triggers were set off and the market was reset pre-market on news out of China. The Shanghai Composite dropped more than 8% that day. By all accounts, a very large market correction for them. That was a year ago. Um, Germany's economy slowed in the second quarter. Saw a saw growth at 0.4%, down from 0.7%. U.S. crude oil stocks are piling up. The API numbers that came out yesterday, I pasted them into Twitter. API oil inventories came in at plus 4.5 million versus negative 1 million the prior week. This is the largest build in a long time, since April. And then other than that, you might have seen this move in gold that just took place. I was just eyeing out the chart. I'll show you that in a minute. And then also, as far as what we were expecting today, by the way, I think the June FHFA housing price index number came out. It's 0.2 versus 0.3 Q on Q. That was month on month, Q on Q. I don't have the complete numbers, but overall, that number just came out 3 minutes ago. As far as what we're expecting for today, we're looking for DOE, crude oil, distillate, and gasoline inventories at 9:30 Central, 10:30 Eastern. Crude oil inventories expected at negative 1 million, which is what API had last week. Negative 1 million. And remember, API reported a very large surplus, surplus 4.5 million. We'll see what DOE reports. U.S. distillate inventories at plus 500,000 and gasoline inventories at negative 1.5 million. As far as what's coming out later today, we also get existing home sales at 9 Central, 10 Eastern. 9 Central, 10 Eastern. Existing home sales in the U.S. for July, 5.5 is the number that's expected. I'm not seeing anything else on deck past crude oil. A 2-year FRN reopen auction at 10:30 Central, and at noon we get a new 5-year note auction for 34 billion. The 2-year FRN is for 13 billion. Let's switch gears and look at what we expected yesterday versus what we saw. Here we go. Yesterday, we were opening in a gap at the time of the trader bite. The market was pushing up against the overnight high, trading 2187.75 as you see here. The expectation was for the market to potentially test down to the gap top or the gap area. The gap mid is at 82.50 or 83.50. The gap top is at 84.50. And then the expectation is it would start to push up towards 2193.75. Didn't quite work out that way. The secondary hypothesis is a shallow pullback towards the gap zone, but the expectation is for continuation upwards to new highs as well, and a more aggressive market to the upside after the market had consolidated over the last 5 days. The expectation is a lot of that volume would dissipate upwards through the island top that we put in last Monday, not this past Monday, but the Monday before, the 15th, and therefore likely to push us up and through. What we got was something completely different. Instead of testing down early Instead of testing down early, remember the primary hypothesis was a drop down and then a push into towards the gap zone and then a push through all-time highs to 93.75. That was what was expected, and that's for the whole session. We have almost the inverse of that. The primary and the secondary hypotheses were bullish, um, and it's actually hypothesis number 4 on my list on my trade plan for the day is the one that ended up working out, which is essentially the opposite of hypo 1. But that's what we had yesterday. Yesterday, we had an incredible 7 point range, 91.50 to 84.50 for the entire session. And where do we end up? We end up with a low right up against the gap zone high right here at 84.50. A very, very stocky profile. Again, really poor auction behavior. The market's really not uh, loose in that it's not cycling up and down through areas to test. We don't see good tapers at the top and the bottom, just like I talked about yesterday at length. We see a terrible weak high right here, just multiple highs. Why is this called a weak high for those who are unfamiliar? A proper high is one where the market pushes into an area that's considered an excess, too expensive, unfair, and it immediately pushes back down and moves away. And as it does that, the profile it forms is this very thin taper that looks like this. That would be the top of the profile, right? And that's because as the price moves up, the buyers become disengaged and the sellers become more aggressive. And so overall, the trade has been really, really, really tough. Again, 7 points of range. God, just this guy just insists on coming in and telling us how the world's coming to an end and the market's going to crash. Anyway, um, and so it leaves these weak highs behind, which in normal market behavior you see that happening all the time when the market's active and so on. But what essentially happens with those weak highs or lows is that they're tested, if not during the session, immediately in the following session. And what we've done is we go to an extreme, and it's almost like a tap that runs out of water, and it just gets to a drip, and then it just sits there and rolls over, and then does the other side. And here we have a weak low yesterday. We finished near the low. We moved away from the value area. The point of control shifted up. We left the point of control behind us. As we moved away, and as I was discussing in the S5 chat form, the expectation is that this is likely to break down into the gap zone and walk its way down towards the point of control, the prior naked point of control, and that's exactly what it did. Lucky that it hit on the mark there. It missed the naked point of control on the overnight low by a tick, but that's just a lucky call. There's really nothing that told me that's exactly what's going to happen, but that is what you would expect as the next area. So the story here is, look, we traded this area again, like I discussed yesterday. A lot of kurtosis in these profiles. I don't think I've ever seen so much kurtosis, so much fatness. If you don't know what kurtosis is this compressed high volume portion of the profile that occurs throughout. It almost looks like the profiles are diseased or something. There's just like this deformity in the profile, and that's okay if you have a rally day, the market rallies and then goes into a consolidation, and you end up with a thin with a high kurtosis top, and that's a P-shaped profile. We see that all the time. But what we have here is kurtosis that distributes itself 2 or 3 times through the profile, making an E-shaped or capital E-shaped or capital F-shaped profile. I have never seen those before, at least not as common as they have been. And essentially, what we had yesterday is another one of those. These strange distributions. Oh, didn't draw that right. So this profile, I don't want to stretch it, but it goes something like this. Another kurtosis goes down, another one, and it just says that there's no consensus here on what the market considers to be value. The market is trading something else, in my opinion. It's looking at something else. It's not building the profile based on its own devices or its own power. This is essentially this is what overnight profiles look like commonly. They have um, very odd shapes, and they're not, bell curved or Gaussian in nature. Um, Although the market isn't like that in nature anyway, but we still see a certain behavior, even if it's skewed to the bottom or whatever. We see the market tapering, the auction coming to a stop, testing, and in a rotation back to the point of control. Then it moves away from value, tests higher. If it cannot find buyers to continue the move higher, then it's likely to move back to the point of control. This is what we're used to. That's what I call a normal auction. Here, we don't see that. So that's my point. I think I belabored it too much, just to be clear, but this is 7 points. 7 points. This is really, really low. And if we go back and look at our daily chart that has the ranges on it, you'll see that we have not hit 7 points in range in a long time. So here's yesterday, 7 points in range. And on a normal session, we had 6.25 here. I forgot that last time we were up here, we hit 6.25 points. That was the island top we left behind, and I'm expecting the same thing. I'm expecting the market to now go back and fall back into this composite zone, this 5-day consolidation zone from last week. But other than that, we don't see. And non-holidays, this is the 4th of July here. This is a holiday. It should be removed. Other than that, we don't see 7 points very often. We've seen it a fair amount in July and August, but before that, it really doesn't occur that often. These little stops here are really holidays. I need to scan and remove those. But other than that, we normally will trade about 10 points, 9 to 10 points, with again 10 points being the most common. 22 to 6 to 22 points is the first standard deviation. But once I remove these holidays, that 6 will probably rise to about 7.25 or so. Anyway, just my point. Very unusual. And so that's where we are. So again, continue to exercise caution and patience and discipline as a trader, because it's not a market where you want to push your trades. Pushing your trades and imposing your expectations on it are just going to result in frustration, not positive results. Okay, so just relax. Try to relax through the process. This is a lot like colonoscopy. You kind of have to go through it, so you can make it painful, or you can just relax and let the market do its job. Terrible analogy, but there you have it. So here's yesterday's trading. This is the overnight session here. You could see that we opened and just went sideways for a while. Again, the Asian session is not doing much, and then the volatility kicks in with the European session, but they didn't do very much here. We left, we took the 87 and pushed it to 87.75, 87.50, and then we're tapering off. There is not much I can use from this overnight session. Unfortunately, there's nothing clear here that tells me which direction the market might take. The overnight inventory is even, it's flat. Delta is fairly flat. There's no imbalance here that I can identify. And so the expectation is that the open this morning will likely be very, very reserved and very choppy. Okay, so just kind of chill in the morning, the first 15 minutes or so. Let the market decide what it wants to do. A quick look at gold. Here's a 30-minute gold chart. It's been sideways for it rallied quite a bit um, over the summer, and it went sideways for a while. It's been going sideways for a good part of August, and then this morning uh, it moved it moved quite a bit. It moved from 1343 or so to about 1332 in a quick move that had a lot of volume, a lot of delta. You could see the delta here was pushed down, but it was bought right up. And delta's rising. There's some buying going on in here, even though it has dropped off. And then you had the continuation move in this bar here that started at 8 a.m. Central. But this is really interesting because the issue with this that I'm having is that I'm not seeing the same effect. Um, I'm not seeing the same effect across other markets. Like normally, when we see a move like this, we would see the equivalent across treasuries, across something, because gold is a fundamental product. It'll affect or respond to what's going on with interest rates, and so do treasuries, and so do currencies. But I'm not seeing very much in the way of what gold is doing here, but I'm keeping an eye on it because it's likely to translate into something. This is how news percolates through the markets. It occurs in one area, and then there's contagion generally, especially in something like gold. So I'm interested today to see how that translates into action. So we'll see how that works. But as far as what I'm expecting for today, these trader bites are getting very lengthy these days. I'll try to cut that down. We're opening against the extreme of yesterday. We're opening against the overnight point of control. We have a fair amount of resistance above us up here at about 88. What I'm expecting here is an open auction in range unless we drift away. I'm expecting it to be a very quiet, very tight open. The expectation is if there is an attempt higher, my first plan, my first hypothesis is to find a reason or to find an area to sell against. And I'm looking for it to return back to the point of control. I'm looking for the market to revisit these days here. I'm going to create a composite of these days. I'm looking for the market to retest this balance down here, the most recent balance since the last high. So I'm creating a special micro composite for it, and that happens to be in line because the market's been just absolutely deadlocked. The composite for this region here from the 16th onwards is 2179 and a quarter, and that becomes the target for today. So that would be hypo 1. I'm expecting the range to remain compressed. I'm not seeing, and I wish we would see a catalyst for people to make a move in these markets, but I'm not seeing any reason to do that. I'm expecting the market to roll over and get back into this composite area back here. That's the primary hypothesis for today. We saw the same action back here when we made this island top, and I'm expecting the same today. It has not pushed through and continued through for some time now. The secondary hypothesis is the same open auction in range, very tight, test into the gap zone, move down to 2181.75, and then find its base, and then start moving back towards 2190 for a continued build of a new balance zone up against yesterday's high. Now that we're back here after the island day. So now that we've moved our trading upwards. And note that the 2190, the point of control, never shifted down yesterday. We've shifted the point of control up and kept it up there, and that supports the potential for hypo 2 as the market accepts these prices a little bit higher. I mean, it was accepting these prices down here at 21.79 and a quarter just fine before it pushed up, and I'm looking for, on hypo 2, I'm looking for that same argument. So I'm going to if I don't catch any sells on a push up per hypo 1, like a push up per hypo 1 would set me up for a sell against some structure, and then I'm looking for it to drop through the gap zone down to 21.80.50 and 21.79 and a quarter. But if we don't see that, if we see it selling right away, I'm going to be looking for buyers. Why? Because I'm looking for balance. I'm not looking for a trend day today. The probability of trend is pretty low at this point, but anything can happen. The market is consolidating, and it's likely to release its energy fairly soon. We're getting into September here next week, and that's when the market generally starts making its move. Okay, so that's all I have for you for today. Hopefully you've gained something from this. Please hit the like button on this video once you watch it, if you like it. It gives me a little more clout, and it dedicates more services to this channel. Compared to other YouTube channels and YouTube videos, I don't get anywhere close to the viewership, but it still allows me to get better service when there is an issue with the server or whatever. Okay, thanks a lot, and I'll catch you tomorrow. Stage 5 traders, we have our AMA today at noon Central, 1 Eastern. The invite was sent out yesterday, will be sent out this morning again. Take care.